All right, guys, we're going to finish up. Chris, give me your last words. Messages you would take and want people to take.
I think raise your odds of some type of a melt up here. I think the shades or the parallels of 99 with this memory move, the way the leadership has come right back to the same old stocks, kind of as we come to the aftermath of the war, raise your odds of some type of a melt up.
I said, come on, baby, turn the lights off. 'Cause it's getting late.
What's going on, guys? Hope everybody's starting off their week with a banger because Bitcoin finally got off its ass and is rallying to our first set of projected targets. We got to cover markets. We got to cover crypto. A lot to go over in this video. But that intro, that was Chris Verone. Chris Verone, if you don't know that name, was voted Market Strategist of the Year last year, largely because he nailed the tariff derangement sell-off. He was looking for the low and, of course, a massive rally to follow, which, as you guys know, that was my view. I projected 7,000. We got to 7,000, a 46% rally, giving you 6 years of gains in a single year. Chris Verone won Strategist of the Year. I won nothing but gratitude for my portfolio. Life is fair. So, why is that important? Why we play that intro? Because Chris is predicting an enhanced risk for a market melt-up, which is very interesting. Wall Street's a bunch of copycats. They all copy people. And when you have somebody that's nailing the moves, including the most recent pullback, Chris, Alex Altman, myself again, talking about the markets going to new all-time highs, people pay attention to what Chris says. And that matters because where's the money? Where is the big dumb money? It's on Wall Street. So it's an interesting view, and I want to go over the charts and look at some of this. I want to break this down. Like last video, I did a Tom Lee breakdown. Alex Altman, who I just mentioned, is an economist I follow very closely from Barclays Bank, chief market strategist there. And I want to show you what he's talking about and why he thinks the market has higher to go. We'll talk about it at the other side of this clip. Lee, roll it.
We begin this hour with global stocks holding steady, with tech leading the way. Alex Altman of Barclays writing, until positioning gets more full, it is hard to position bearish even after this rally. Alex joins us now for more. Alex, good morning.
Good morning.
Good to see you. Before we talk about irrational or rational, let's talk about exuberance. Where are you seeing exuberance at the moment?
Honestly, not that many spots. I suppose we have to gravitate towards the semiconductor index. That would be one place that I would say the word exuberance in semiconductors after a blistering 50% rally has sort of become conjoined. But actually, if you look beyond just the price action itself, look at the number of constituents within the semiconductor index that are seeing call vol above put vol, i.e. you're seeing a demand for that right tail. It's just not there, not even like it was earlier in the year. So, and then look at things like Bitcoin, still down on the year. And then actually look at headline indices. Yes, they're up, but actually year to date, it's relatively modest. So people, I think, have become very focused on the path to get here and the velocity rather than actually necessarily taking stock of where we are.
So what's your message?
So Alex is being asked about what he's seeing that could potentially mean exuberance. The reason he's being asked about exuberance is when you have a euphoric peak, you then can possibly get a major reversal, right? And he mentions the only thing that he really sees that's exuberant is the stocks right here on my screen. And he talked about the 50% move off the low. Now, I left these drawings on here from last week's video. We defined the range off of this little pullback, and then what did it do? We talked about it ping-ponging, breaking back out to the upside. It's exactly what you have, another new all-time high in the stocks. It broke out to the upside. He mentions that as exuberance, but then he talks about Bitcoin not behaving exuberant. The reason that's important is Bitcoin is a beta asset. It tends to outperform. And then you look at certain sectors, you still have staples like Costco trading at a higher multiple than some of the semiconductors. So it's a very interesting market. When you think about Chris Verone talking about a potential melt up, you have Alex talking about the market is behaving in certain areas exuberantly, but there's room for rotation. There's room to move up. And I want you to hear what Alex says here in the second clip, and we'll finish it off with some comments on the other side and jump into the TA. Lee, roll it.
So what's your message to people who are looking at this and they've missed it? the 50% move off the lows that we've seen on, say, chips, the rally we've seen, double digits on the S&P 500, a little bit more on the NASDAQ 100. What's your advice to those people?
Okay, so I think there's two things. First of all, I think we have to work off the assumption that clearly the pace we've just seen over the past month is non-repeatable. We had the 27th best month in the S&P since 1928. It was the second best April ever. So I think we have to work off the assumption, moving back to a more normalized pace of S&P returns, something along the lines of, I call it 1% a month is kind of where your average is. S&P goes up on average 73% of the time on a sort of forward 1 to 2 month basis. So that's kind of what we've got to work off. The other thing is we've got to work off asymmetry. Like the market is no longer asymmetric like it was as we were advocating in March and April. Right now, I think our forecasters, Barclays Research, is around about 7,600. So you've still got a little bit of upside, but at the same time, we have to work off the assumption there is back to a negative decay for risk assets, i.e. the longer this goes on within the Straits of Hormuz, the more problems we're now going to face. A lot of the buffer that we had in place going into this debacle is now going to get eroded. So if this is still dealing with this blockade at the end of May, then I think we have to work off the assumption the symmetry of risk doesn't look very good.
Things are starting to change.
Just listen to some of those numbers he threw out there. The market just had its 27th best month since 1928. The second best April of all time, and everything is still pushing higher, and it has reason to push higher. We've also had 8 quarters of earnings growth, right? And earnings were projected to come in around 12 to 13%. They're being revised up closer to 19, 20%. But what's interesting is the timing, because this is all about duration, and I share this opinion. Duration of this conflict with Iran. Now, he has May as the pivotal month, which makes a lot of sense when we look at our seasonal chart. Typically, 2 of the last 3 years, the breakout for the summer rally occurred mid-May. Mid-May, you got the next leg up into the summer rally. You got pullbacks, and then you broke out to the upside come mid-May. So this is something to pay attention to. He also has a price target of 7,600. Now, last week we talked about Tom Lee. He was looking at 7,300. We're at 7,264 right now. And again, something else Alex talked about was this was an asymmetrical move to the upside because of the catch-up, because everybody sold. Once again, all the big money has to pile back in. Tom Lee was looking at the flows and said retail sold the bottom. And I wonder why. Look at the biggest financial channels in this space, and people were watching things. We covered this last week about nuclear war, $250 oil, everything's falling apart. The market's getting cut in half. NASDAQ down by 80%. Bitcoin's losing to 0 and going to 10K. All of that FUD was out there, and what does the market do? The market is in greed, and it's pushing higher. So I agree. May, we have to find some type of resolution because the duration of having the markets higher, Alex talks about later on, you could possibly add another $20 to the price of oil if this thing goes past May. So if it goes past May, it's just a lot of pressure on the market to keep this euphoric state that's starting to develop, that's exploding in the semiconductor stocks. But this euphoric state can't just stay up there forever. It can't stay elevated. The market, the S&P, as he said, typically moves about 1% every month to 2 months, right? So looking at a 1 or 2 month projection, it typically moves up 1% a month. So you can still see that grind. And again, he has 7,600. So when we look at this, again, this is how I have this laid out, right? So we'll look at the breakout. There's our April 2025 low. Here's the breakout. This is a summer rally, spring equinox sell-off, right? Starting over here in 23. You rally up into July, mid to late July, spring equinox sell-off, rally up to mid to late July. You get pullbacks and sideways action right around the May time period, which is where we are now. But once again, spring equinox sell-off, euphoric, strongest turnaround rally in stock market history, spring equinox sell-off, and a big rally. And people are shocked and surprised by this. Why? You literally did the same thing 3 years in a row, but people miss the forest through the trees. So just understand this. We're going to have resistance at some point. The market rally will top at some point, and it will get some type of retracement. Can we predict that retracement? Again, Tom Lee last video was talking about potentially a 20% bear market retracement. What did we do the prior 2 years? Not counting last year, but after last year's rally, we went down 10%. Look at the prior 2 years. You rally into July, 10%. You rally into July, 10%. Could we just get a 10% a 10% drawdown? It's possible. So let's just start off and look at the charts, and we'll lay some of this out. If we look at the crypto, where are we at on fear and greed? You're in neutral. It's still underperforming. It's a beta asset. It should be outperforming, typically a 2x beta over the NASDAQ. It's underperforming. Again, part of my theory on why that is because the biggest influencers in this space have been telling you it's going to 40K. Don't buy the market. We're going to cover the crypto charts here in a second. But here you are in greed at 67 on the marketplace. We already covered the stocks. Let's look at this. Symmetrical moves in the market. All my education, guys, everything I know, the key things that I know, Fibonacci, wave symmetry, patterns, that's all available there if you want to join our YouTube. And it's not expensive. It's $15 to get access to all of that, including my market updates throughout the week. I purposely priced it cheaper than the price of a book. You can also join our Discord right through there as well. So check that out and give me a follow at X at Market Canary. So we look at our symmetrical moves. We already know first wave up from the pandemic, boom, 2,600 points. After the 2022 bottom, look at your symmetrical moves, 2,600 points. What happens after both of these 2,600 point moves? 27% retracement, 22% retracement. If we go from April 7th low of 2025 up to my predicted target of 7,500, something I've been sharing with you since January, this gives you a symmetrical move of 2,674. 2674, 2663, 2640, and then we're going to get some type of retracement. Could be 10%, it could be larger. The thing about the retracements that's very interesting is they as well are symmetrical. Don't pay attention to the percent. The percent doesn't matter. It matters where you're falling from. Look at the point total, 1,331 points. And the 2022 retracement. What about the 2025 retracement? 1,340 points. So 1,330, 1,340. So we can gauge this once we get a top. If it's from 7,500 and you fall down, 1,360 points takes you to where? It takes you to 6156 is what it would take you to if you do the exact same retracement after doing the exact same up move in the process here. So again, symmetrical moves doesn't mean it has to do that. No, the market tends to move in symmetry because the market adheres to natural law. Primary wave 1 up, primary wave 2 up, primary wave 3 up. Retracement matches, first retracement, second retracement, potentially third retracement if you get the exact same drawdown. Be very interesting to see. In my video, I told you I was going to make a video on the generational gains, but that has to do with what's happening later starting in November. I wanted to get this video about what's happening now because everybody's asking, where's the top? When's the top going to happen? When is it going to break down? So I wanted to focus on this stuff today. Again, the seasonal chart pattern. If we look at the S&P here, 7265. If you pull this fib, we already talked about looking at our growth expansion from this downturn, we get 7453. Remember, my target's 7,500. And then we get the 200%, a doubling of this move, right? If we double the void, we're going to 7720. So this is going to be really interesting to see because I think you have another leg once and if we can settle this conflict in the Gulf. If that can get settled, oil prices are going to fall. They're going to go from over 100 back down into the 80s initially. You'll see like low 90s, mid 80s, but eventually it will fall back down into the 70s. But just the fact that oil prices are falling, you could spur this thing. And I don't know if Chris Verone would count this as a melt up, but 7,700, which again would take out Alex Altman's target of 7,600, would be massive. The interesting thing is, if we did get to 7,700 and you look at the point count, if you fell once you come up here and break back down and get a 10% retracement, something you've done after the last 2 years or last 3 years, Summer rallies after July, you get a 10% retracement, except in 2025, you got 2%. But the prior 2 years, you got 10%. If you go to 10%, you're looking at almost 7K, 69.80, which brings you right back to the top of where you came from. So you could round trip from up there down to 7K. If you go 20%, you're looking closer to the bottom of where you started this rally off from back here on March 31st. So we'll see. But right now we don't have a top, and you have a major outlying catalyst. The market is rallying based off of growth of earnings right now, and the positioning is not full. So there's room for this thing to move higher. Let's go ahead and look at this as well on the NASDAQ. I mean, NASDAQ new all-time highs. I'm talking to you. NASDAQ targets 28.4, 29.679. I'm just going to call that 30K. Let's see if we can get there. This is also going to drag the beta assets up like Bitcoin. But again, this is what I'm looking at, guys. We're going to look at retracements. Got to get that top first. And this thing just keeps making new all-time highs. If money starts to rotate because the leadership is thin right now, you can see other sectors pick up as well. We look at the NASDAQ. You're about 55% above the 20 here on the NASDAQ. Look at that buying volume, right? Everybody told you the market's crashing, and look what the market did. It went up. You're overbought. Overbought is just a condition. It's not even euphoric yet. You're simply in greed. You're not even in extreme greed yet. Get this thing in extreme greed, which I think could easily happen if the oil prices start dropping. We get that resolution. You'll see extreme greed. Then we're going to start looking for tippy tops. Let's jump over to crypto. Crypto, we need to talk about IGV. I drew this for you last week. This is a fractal wave pattern. It is not Elliott wave. And look how this played out, right? These last 7 candles weren't even here, but we were looking for 50% level to hold at 81.49. And this is a bottoming pattern. You need to see this breakout to the upside. IGV can come up to that $100, $104 target if we can break out to the upside. And the reason that's important, I bring this up every video, 80% correlation with Bitcoin on a 30-day rolling average. Bitcoin in gold, IGV in hot pink. You want to see this break out together. They top together. They swing together. It's important to watch. If we look at Bitcoin, people that were telling you the market was crashing don't do anything. Hey, it could still make a new low, but it had movement to go up. And as a trader, want to trade the moves. It's up 36%. Almost 22,000 points from when everybody told you not to touch it. It's dead. It's going down to 40K. See you in November. Well, it's up 22,000 points, and I think it's coming up to 86 to 92K. That's the levels I'm looking at. We're looking on a 3-day chart. 3-day chart, we got to break that trend line, and you're up right against it. Look at the, just look at the RSI. Again, it's just like TA. It's just common sense. You're low, higher lows, higher highs, all in trend, 3-day chart, moving up to target, momentum bullish, volume bullish, everything's bullish. As I said, intermediate term downtrend, which is what everybody focuses on, right? The lemmings all focus on that. The thumbnails all focus on that. Everything's falling apart, Bitcoin to 40K, but you have to look at the turns in the trend, and you are in a near-term uptrend, as you can see on the chart. Bitcoin broke the downtrend line, flipped the 54 RMA on the daily. It is breaking out to the upside here towards 86 to 92K. We open this up, not even overbought yet on the RSI. Look at your volume. Look how you came back and back tested that trend line. Again, volume delta live, right? It's showing you live who's winning the battle. Buyers versus sellers. Momentum still bullish. Everything's still a nice setup. It's not even euphoric. It just feels like a grind. That's all it feels like. It's just a grind. Let's jump over to Ethereum. Ethereum on a 3-day chart broke the downtrend line, trying to stay above our 18 RMA here on the 3-day chart. And right now it's at 2380, but it really needs to break. It needs to break 2463 to come up to the next level targets, 2800, 3000. Again, targets that you have had for weeks and this near-term bullish uptrend. If you didn't do anything or you sold at the bottom because everybody told you Ethereum was crashing, it's rallied up 41%, 723 points. Major moves. So let's see if we can get Ethereum to break 2463 and come up to 2800 to 3000, which again, I think it's going to, and I've been predicting that because it makes sense with the moves you're seeing in the market. Solana has been dead. This is a 3-day chart. I'm still looking for a breakout in Solana, and I believe ultimately Solana is going 116 to 128, going to do a deep dive for members. If you're interested in that, definitely check out the join button on YouTube. Hope to see you guys there. Hope you enjoyed this video. Follow me on X because I post on X, and I enjoy engaging with everybody there as well. Have a fantastic week, everybody.